practitioners, professors, and trade finance experts joining us all the way from Thailand about what is the state of international trade finance and how we can tweak or change rules to make it better. International economy determines international trade. International trade is greatly intertwined with international trade finance. Trade finance is the grease that keeps the wheels of international trade moving. And the numbers have already been quoted by the secretaries. The global economy is expected to grow at less than 3%. The IMF had to lower the pace of growth just in January, about 20 basis points lower than what they said in their previous meeting in October. And likewise, international trade volumes are also expected to fall to less than 1% after a decent growth last year. Therefore, the challenges are aplenty. Let me begin by actually stating that scenario, since we have the experts, to tell us what is the state of international trade, how important it is for the development of all the nations who are represented here, and then we come to the gaps in trade finance itself. So that Stephen Beck doesn't feel left out, I'm going to start with you, Mr. Beck. If you can lay the terrain for us, the importance of international trade finance for international trade and economic development. Over to you.
Many thanks, Latha. Very nice to be with all of you. Sorry I can't be there personally, but delighted to be part of this terrific discussion. And I'm delighted that that it's attracted the attention of the G20 because it is critical. So to step back for a second, I mean, I think we all know that trade is critical for development. It's lifted millions of people out of poverty. But if we don't have sufficient financing to back trade-led growth, we're not going to be able to get the maximum development impact, the maximum gains that we can from trade. The United Nations Addis Ababa Declaration on Financing for Development identified trade finance as being critical to achieving the Sustainable Development Goals. So this is further sort of evidence around the importance of trade and financing, sufficient financing to back trade. But as has been pointed out, of course, there are substantial gaps. I mean, we measure, we estimate what those global gaps are for trade finance, and I think that figure was referenced earlier on as 1.7 trillion that we estimated a couple of years ago. That estimate was elevated to 2 trillion of a global gap back in September. But I think that we all know intuitively the gap is actually getting larger than that. One of the primary reasons for the gap getting larger is inflation. So where financial institutions have a country limit and a counterparty limit to support trade, the value of that limit to support trade has, in real terms, reduced, because now the value of a transaction in commodities or whatever it is has gone up substantially, and those credit limits, country limits, counterparty limits to support trade have not increased. In fact, if anything, a lot of financial institutions have reduced their exposure. So this is really exacerbated the whole sort of situation with respect to the gap, and it's something we really need to be concerned about because it is hitting at inclusion, our ability to grow and to reach our sustainable development goals. I'll leave it there.
Yes, I guess all of us are coming from backgrounds where this is greatly appreciated. As it is, the higher cost of commodities has made the available trade finance inadequate. Working capital cycles look big, working capital amounts look big, but the amount that's actually getting financed is perhaps less. And what's worse, along with inflation come rising interest rates, and that's making the terms of finance much more expensive. I'll come to the panel on, these cycles are inevitable and expected, and whether we can have institutions and practices which can forestall, which can prepare us for these cycles. But before that, since there's so much emphasis on MSMEs, let me straight away start over there. In India, for instance, the MSMEs, we use it as a short form for medium and small enterprises, are a very important contributor to our exports. I mean, handicrafts, textiles are huge employers of people and small companies. But yet, Exim data, which was prepared for this seminar, points out that 41% of the applications for trade finance come from MSMEs, but 52% are rejected, either for want of collateral or, probably because the terms are not met, they're too expensive. So let me come to that, Andreas. You've done a lot of studies on a lot of countries. Is this a common problem that small enterprises, either for want of collateral or for their inability to meet the very high standards of compliance, money laundering, is this a common problem that other countries encounter?
Yeah, thank you very much for the excellent question. And unfortunately, the answer is yes, it is a common problem. So we sometimes think that the challenge of financing gaps is mainly for least developed countries or emerging markets and developing economies. But the reality is, when I look at Finland, at Denmark, at Germany, at a lot of highly developed countries, there is a significant gap as well for SMEs regarding financing. And of course, this is a big challenge because you just mentioned that SMEs are the backbone of the economy. They are most innovative drivers. We need them for the just transition to net zero. We need them for innovation. And there are a couple of problems behind. ChatGPT was able to answer a couple of the questions, but unfortunately didn't give proper answers. I think the answer is, of course, there is a reason for that, why commercial banks are not able to serve SMEs in a sufficient and good manner, because the regulatory issues, anti-money laundering, know your customer. I mean, it's a challenge they have to cope with. It is something they have to do because we know all the bad experience in the past, so we can't blame them. I totally understand that, why commercial banks are reluctant regarding MSME finance. Of course, it's a challenge as well regarding the changing business model of commercial financial institutions. It's the previous buy and hold strategy more to an originate and distribute model, which is the practice in commercial banks, in particular in the big banks. So the solution is, in many countries, that governments must step in. ECGT, Exim India, there are solution-oriented SME support tools. And the same applies in other countries as well. And when we think about trade financing, it is quite important that we are not too narrow. Trade finance is not only post-shipment supplier credits. It's not only letters of credit. You mentioned working capital facilities. They're absolutely key for them. Even more, it's innovative financing in the innovation phases, is capital expenditure financing, and it's also the medium and long-term export financing where SMEs need that support. Governments can step in, they do that, in many times in a sufficient manner, but it's a global problem which has been much more relevant since the global financial crisis, the Euro crisis, the COVID crisis, the poly crisis. We could speak about crisis all the time, and one of the solutions, the keys from my point of view, is a government intervention which is in line with international rules and regulations and global standards.
Government intervention, I guess the ECAs are set up for that, and likewise multilateral. I would hope multilateral banks, ADB is with us, whether they can provide solutions for spaces where commercial banks are not able to oblige, either because of their shareholders or because of regulatory demands and anti-money laundering rules. But, you know, in India, we hold a great hope that digitalization is going to be the answer. What do MSMEs lack? I'm given to understand that their biggest lack is collateral. And digitalization hopefully will give MSMEs some financing, some trade financing because of the cash flow. Then in India, GST has done extremely well, and it has left behind a network, a footprint, which probably enables banks to guess what the flow of finance will be. So, Gaurav, that question to you as the banker. Has the GSTN already given you enough data, or is there enough other kind of payments data which allow for not collateral financing, but cash flow financing?
Absolutely, Lata, and a great question, because the future, as we all know, it belongs to digitization. And it really helps in reducing the overall cost of a life cycle of lending to any client, be it MSME or a large corporate. I think the biggest challenge for banks is MSMEs are located all over in remote areas, and the cost of accessing them, the cost of onboarding them, then the cost of compliance, and the cost of credit monitoring creates a huge amount of work. And if you tend to do it physically in the routine way of paper-based way, no bank is having that capacity. So one model is you have specialized finance companies who would lend to them, and then banks are refinancing them. That's the old traditional way. But coming to your point, digitization, it has really, removed the friction in the entire process, the life cycle. The onboarding of a MSME, for example, with the courtesy of the India tech stack, which is one of the biggest across the world, has helped in reducing the time which is required to onboard a MSME or a borrower. Because of the entire demographic details available out there, because of all the financial data which is available out there, it has really democratized. We heard that word, right, in the opening remarks. So this is what is making it happen. And this is all through API, which is all tech-driven, and banks are able to onboard clients. Let me give you an example. So supply chain financing is a big focus area for us, wherein we help our large corporate clients to bring financial efficiency in the entire supply chain, right? There's a physical supply chain, but that doesn't work unless there's a financial supply chain which is well-oiled. And that's where you have various MSMEs who are, part of the distribution network or the supply side network. And that's where we are looking at all this tech data, the tech stack, not just to onboard them, but also look at, can we set up limits on these borrowers in a very different way? The traditional way of lending to MSME is to look at the financial statements, which is prepared once in a year. Most of the times, these things may not be audited on time because these are small businesses. And therefore, it becomes difficult for any traditional commercial bank to take a credit call. Now, how do you address that?
Are you able to take cash flow financing calls?
Absolutely. So it's the flow-based funding, which is more real-time. The financial statements would still be dated 31st March. You are sitting in December, but you are relying on that. So it's the real-time GSTN, for example. Now banks can access the GSTN data, obviously, if the borrower authorizes them. Then there is customs has created IDPMS data, EDPMS data, which is all single source of truth, so to say. So it is not just helping banks in bringing the efficiency, but also reducing the fraud risk. And that is where, it brings a lot of comfort, reduces the transaction cost to really, go out there. And we are working on a model wherein we would be able to lend to the entire distribution chain, for example, of a large corporate by looking at the data. By looking at the data that would demonstrate the strength of relationship that is happening between both of them. That data will tell us how frequently money has been paid back, whether there are any returns, what is the volume of purchase made, and it's all coming from single source of truth, which is, let's say, GSTN network. And this is what is changing the game. And I think there are several, and we'll talk about that, but technology is something that will change the game, that will eliminate this gap. It has that potential. But there are certain drastic steps, including, buy-in from all the stakeholders, including regulators, investors, borrowers, lenders, the entire ecosystem.